Well, it's time for the Brisbane update. I've just spent 2 days in Brisbane. As you can see, I've got the magnificent Sydney Bridge behind me. Just arrived in Sydney this morning, and I wanted to bring you what I actually found in Brisbane. Now, Brisbane's a fascinating thing. It's just been through a major disaster, and I think from a macro and microeconomic point of view, that is one of the most important things to understand. So firstly, what actually happened? Well, on the 11th of January, they had massive floods. It had been raining for 3 weeks, but the most important thing is their major dam got to up to 190% full. They had to release water, and they were actually releasing water to the equivalent of the entire Sydney Harbour system every single day out of that river. Now just imagine what impact that meant, and they did that for 3 days on the trot. So all that water came flooding down the Brisbane River, and then what actually happened is they had a high tide as well. So the tide rose from the seaside, and so you had this river flashing down, hitting the tide, and the rivers just rose. I went to see Richard Dunn's house, our partner here in Australia. Absolutely fascinating. He lives on a tiny little creek, there's no water in it, and yet at one point the water must have been 2 or 3 kilometers wide as it just stretched out across the entire suburb. His house was basically taken out, the entire first floor. They've had to gut his entire house, everything, take out the floorboards, take out all the walling, all the electrics, all the plumbing. They had to redo basically absolutely everything. I think the thing that's most important basically is that once the rivers burst its banks and these rose, and you know, his house wasn't washed away like a tsunami or in a rapid flash flood. It was actually just like a dam rising basically. But the problem is his whole suburb got taken out. The shops, there was a Bunnings, which is a massive superstore that was 3/4 high. They lost all their stock. You must understand the impact that this has had. The city council believes that they've got to refund or pay back about $450 million. They basically cancelled all the infrastructure projects that they were working on, all the new ones, so that they can invest in repairing the older areas. The state of Queensland, $4 to $5 billion is expected to be required to actually repair what has actually happened with regards to the flood. Interesting enough, they've just come out with some new zoning laws. 30,000 homes have been affected by the Queensland floodline. Now that's houses that are basically below the 100-year flood line. They've actually reduced, they've made it higher in terms of where it actually is. And I think the most important thing with regards to that is what impact that's going to have on those houses. Do you know, at the end of the day, 12 to 20,000 homes, you hear different reports, were actually directly affected, like Richard's house. And I will put up some video clips so that you can see and some pictures of the type of dramatic impact this has had. But think about it going forward now. Those houses, when you look to actually go and sell one of those houses, it's going to be very, very difficult. I mean, he's got a beautiful house with a beautiful view, but the problem is people wanting to come and buy those homes will know now that they're in a flood zone. They flooded in '74, and now they've flooded again in 2011. And even though they built that huge dam, it wasn't able to make an impact and to stop these houses from being flooded. So he believes that the values on those properties have gone down by at least 10%. I believe it could even be more. Once he goes to try and get insurance, he also can't get insurance because companies don't want to insure it's below the 100-year flood line. So even if someone was to wanting to buy a house there, it's very difficult to insure the property or the contents of the property. And it's very scary to know how few people actually insured their properties in Queensland. And that has had a huge impact. There was a Zimbabwean that had a house that got washed away, all its contents, its entire house, no insurance. And the Zimbabwean community actually clubbed together to raise $80,000 to help it, because that was his entire life that was lost. And there are so many people, so many stories like that, of people who had all their equity, all their wealth tied up in their house, only to have it destroyed. And if you don't have that insurance, you've got to go in and do all that work and get it all redone. I mean, as an example, one of the people that we know here, a gentleman by the name of Mike Mino, he bought in a Mervac development, a big, brand new, beautiful building. His apartment was on the 5th floor, so you would think, well, he hasn't been affected at all. But the problem is that the planning was that they could build from the 100-year flood line. But what they did is they put all the services below the 100-year flood line. So you had the electricity, you had the lifts, you had the water, and what that did is it all got flooded and taken out. So even though his apartment's on the 5th floor, there's no water, there's no electricity, no one can live in the building. And this is a huge apartment block with over 1,000 apartments, really upmarket, 5 k's from the city, on the river. It's a really, really spectacular development. Now, the whole thing is going to cost just that development $3 million. They had no insurance. In fact, of nearly 1,500 sectional title apartment blocks in Brisbane, only 2 of them actually had insurance for flood damage, and they weren't one of them. So it's $3 million. All the residents have got to club together. He's got to put in $10,000 special levy just to get his building operational. But because it's not operational, there's no tenants in the property. So for over 2 months, he's also lost out on that, which is over about $6,000. So you start to see the huge impact that this has had on people. Now that's an investment property. One of the things you've got to be asking yourself is, if he had an Ozinvest property, he would have been part of the 10-year lease back and he wouldn't have been affected. Now you start to see when it means such a big thing. But if you are looking to buy a property, I know it sounds silly, but you really need to look at the implications of a flood and what it'll actually have. What is it actually going to mean to the long term in terms of the property market? Look, certainly for the next year or 2 or 3, it's going to have a huge impact on the yields. The vacancy rates are below 1% and virtually been nullified. Ozinvest property literally all got sapped up because people had to find alternative accommodation like Richard Dunn. And as they also said, it's very tough for people because they've got a mortgage on the one hand in their home, they can't live in it, and yet they don't have more money to go and actually rent. So it's going to have a massive impact on the economy. It is going to affect companies, and that will, in the short term, it will affect capital growth, I believe. But at the end of the day, the fundamentals of supply and demand, 20,000 homes have been taken out of the market. People want to live on the higher ground. People want to live in the newer estates, which tend to be on the higher ground with better planning. And that will add huge value to investment properties in terms of where it is. But it'll take a little while, because in the short term, there's going to be a huge amount of money put into infrastructure and repairing what has actually happened. And it's also going to take a long time for people to get back onto their feet, because they've had to spend a lot. Someone like Richard Dunn's had to put a hell of a lot of money in his, take it out of his pocket to restore and fix his house. And I think that's a huge thing. I also asked Mike Mina on the impact of the market as a whole. He had some very interesting things to say. At the end of the day, he said supply and demand. He said unless unemployment really goes through the roof here in Australia, they don't actually see the property market being directly impacted. He spoke about supply and demand and the fundamentals of supply and demand, and he said the most important thing, like in America, like in Ireland, like in Spain, the biggest problem in those markets was an oversupply, and they don't have that here in Australia, which I think. He also said the banks are very sound, generally only lending 75% loan to value to people, and because of that they're a lot stricter, and therefore the financing fundamentals are certainly in place. The one last bit of stats that I thought was very interesting as an investor, Brisbane, I didn't know this, is the biggest geographical city in the Southern Hemisphere. So talking to everyone here in Australia, Brisbane is one of the hotspots to watch, but one has to take a medium to long-term view. Rental yields are rising fast. It's going to take a little while for the property market to improve in terms of capital growth, but I've got all the finance documents, all the research, and it says that Brisbane is at the bottom of the cycle. This is certainly a market to watch.